That report will set the tone for our discussion today on Business Nigeria. And with me in the studio to analyze this is the MD CEO Infoware Limited, Uwa Agbonile. Thank you so much for your time.
Thank you.
Yeah, I'm going to start this way. What's your assessment? A lot of figures have been reeled out. What's your assessment of the market performance, talking about the Nigerian market now, of course, for 2016, with all of this that we have out?
Well, from an analytical standpoint, the performance was not that good. It was clearly negative, a negative performance. So I guess to kind of look at it, if you look at it overall throughout the year though, depending on the kind of investor you are, if you were picking what you were doing, then you might still have performed relatively okay. For example, around June, the market, the ASI was actually picked around 30,000, right? And then it started to decline. So I think it depends on the research and analytical capabilities that you have, so that at this point in time, especially last year, the people that were basically doing analysis and knowing when to go in and get out of the market will probably come out ahead rather than just stay in the market all through the entire period.
Indeed, but let's look at some fundamentals identified here now. Yeah. We have liquidity crisis, we know of recession, it's no more news. Yeah. And this actually dealt heavy blows on our capital market, where we're closing investment yield at -6%. I don't think this is attractive to investors.
No, well, there's a heck of a lot of things that are, you could say, our economy needs to deal with, or the entire ecosystem, both policy and investment strategy-wise, that needs to deal with to make things happen, right? And there are some things that are within investors' controls, and there are some things that are not within investors' control. I'm not an expert in monetary policy per se, but clearly everybody understands that there are a number of things that need to happen in that stage, in that area. Now, from as an investment standpoint, or at least from our standpoint as being technology providers and providing analytics, the thing is to say, okay, what do I control and what can I do within the spectrum of what I control? And from my perspective is to say, okay, look at the market, figure out what are the investable components that makes sense for you to invest in, and you deal with that. So, I mean, for example, if people have been watching the market and looking at kind of analytics that happened, you'll notice, I think sometime in October, last quarter of last year, there were huge movements in some stocks. For example, I believe Oando, Total, and the rest of them, they had these huge swings. So for the people that had the analytical capability to see it, you may not catch from the very beginning, but there are tools for knowing when that trend has started, and you can potentially jump on that trend, ride the bandwagon, and get some of the gains that came out of it.
Indeed, so it's almost like taking advantage of that opportunity.
Absolutely. If you have the right technology, like you're using the kind of technology that we provide, you would have been able to see it and take advantage of it.
Now, indeed, now let's go to some sectors now. Financial sector, the oil and gas sector. I think they are the, if I could use the word, attractive sectors in the Nigerian capital market for now. Zenith is doing very well. UBA and the oil sector, you even identified some of them. But I think that's not far from the issues around the price of crude oil and all of that bouncing back. For the financial sector, with all of what we saw last year, what do you think? What do you make of this? The financial sector, the stand-up, does it look attractive to you?
That's a very tricky question. So again, I'll use analytics. So here's does it look attractive? I would say yes, but you be selective. Personally, that's what I would say. Yes, be selective. The reason is there are a bunch of things that are happening right now within the financial sector. Right, it looks like in this year the banks, a number of banks may likely come under pressure. Anyone with foreign exchange exposure, for example, and that have, say, that issued bonds and stuff like that, and they're coming due this year, then they're clearly going to come under some level of pressure, right? So the trick here will be to look at this sector, study it very, very carefully, look at the numbers, look at the next, say, quarter performance, and then use that to make readings as to what you do. Again, I am more of a financial, of an analyst type person. So I'll look at the market now and say, okay, if you look at what the ASI is doing, the 50-day and 10-day moving averages and the 200-day moving average, and including the SI itself, they are very, very close right now. So it's like the market is trying to decide on a direction in which it's going to go. The question is it going to go up or is it going to go down? If you look at the current World Bank estimate of growth for Nigeria for 2017, it's about 1% or thereabouts, which means Nigeria is going to get out of recession. If Nigeria goes out of recession, which benefits the overall economy, then the trend line might be that the market itself will respond positively, or the market usually will respond positively even before that happens, on the assumption that that's going to happen. So I think the key thing here is to watch that sector, monitor them using analytics to figure out when the trend lines start to diverge, and then you take your positions and you react as quickly as possible. So, like some people say, you don't want to be caught catching the falling knife. That's a term that people
Indeed.
tend to use.
Let's do on the capital market, and something just pricked my mind. I remember issues surrounding consumer goods. Now, this is a very important part of the economy because people go ahead to buy consumables and all of that. But I know of the consumer purchasing power being low at this time because some states are not paying salaries and all of that. And there's a decline from that sector, 0.94%. What other factors do you think is responsible for the decline in the consumer goods sector?
I think the obvious one, just by looking at their balance sheet and looking at stuff, and we learn more as they declare their end of year results and stuff like that, would be cost. Their cost clearly has risen significantly over the last year just because of the exchange rate issues that have arisen during the year. And like you have already stated, the purchasing capabilities of the average Nigerian has not increased, has actually declined because of inflation issues. So they are having high costs, but low margins simply because they can't raise prices that highly. So and that's clearly reflecting their numbers right now.
Indeed,
Yeah.
indeed, and that also takes me to the oil and gas market too. You know, as at last year, it wasn't really looking attractive. But if we are to follow what we have now, as at today, OPEC basket crude is at 53, between 53 to 55. I'm looking at a situation whereby our budget is on about $42 per barrel and all of that. I think this should be a good time. Oil receipts will increase for the country. It's not a good time for us to bounce into some infrastructure development, or are we still going to? And I'm so scared. Diversification. Are we sure not going to look away from that when we start getting lots of money from the crude oil market again?
Oh, that's a tricky one. I was in a discussion with a number of experts around this, right? And the general, I won't say conclusion, but the general trend, or how will I put it now, what people are getting to decide on is this, that the chances are very high that oil is not going to bounce too high above $60 per barrel. It has to do with certain kinds of pressure points that occur. For example, when oil rises above 50, more shale production becomes economical and becomes viable, which means there's going to be a lot more oil in the market, which is going to force the prices to go down again. So it sounds like oil is going to bounce around a certain range. What exactly that range is, not quite sure. Or, again, unless some unknown, unforeseen event happens that's going to force it to go way higher. So that's kind of where that seems to sit. So from my opinion, I think from a planning standpoint, I won't bank on oil rising beyond 60 that much, but you never can tell.
Indeed, we really have to focus on diversification.
Clearly, we do.
It is clearly we really have to do that so that we don't go back to what is happening or what's been happening to us.
Yes.
Now, back to the NSC again. We're talking about this infrastructure deficit which we face in the country.
Yes. And
some analysts, I think from the analytical point of view now, like you said, they've argued that we could raise bonds from the capital market. The capital market is supposed to be the backbone of any economy, the country's capital market. But how do we, I don't know, China just gave us, we just had another deal of $40 billion. I think yesterday we just signed that deal. How can our capital market also help us actualize or fix some of our infrastructure?
It's a matter of, well, the capital market should be the ideal place where that happens, ideally, where people go to raise funds, right? It's a complex thing. First of all, I think because of the bubble that happened last time, the level of investment participation in the capital market is very low. It's very low. And I know that there's been so many entities, including Nigerian Stock Exchange, that's been working pretty hard at trying to increase that. And everybody needs to do, I would say you're doing that by doing this program and by trying to provide more information. From a technology standpoint, entities like ours, we're also trying to do that. So I think one issue is that, yes, money should be raised from the capital market, but awareness so that investors can actually go there needs to happen, and then investor confidence needs to be high. People are not going to invest their money in places where there's not enough confidence. So there needs to be a lot more visibility as to what's going on. There needs to be apparent, clear transparency, not just transparency, but made clear that it's transparent, such that people don't have any doubts that what they are investing in, that they are not going to be disadvantaged at the end of the day. So those are the semantics that kind of all need to be in place. And I think a number of that is happening. There are some initiatives that's also going on right now. I think there's a DMO initiative to have bonds be traded in Nigerian Stock Exchange, for example. We're all engaged in that and trying to make that happen. I think, so 2017, honestly, so far seems to be a pretty good start to the year. and everybody's hoping that things are going to be much better.
Much better, but we still have to deal with the forex challenge. That is the major thing that will bring investors back.
Correct. I would agree. We need a transparent policy that doesn't appear to make people disadvantaged. People are very, very worried that if they bring their money in, that they might not either be able to get it out, or that something might happen in such a way that the value of what they're getting out may now become vastly different from what they brought in. In my view, I actually don't think, this is purely my opinion on this, I don't think our currency at value like what it is what it should be. I think it probably should be in the neighborhood of about 250, 300 at worst. The reason why is perception. Perception drives everything. Information, perception, and being clear and having a plan that says, here's what we're going to do in 3 months, 6 months down the road. When people are clear as to what exactly is going to come down the pipe, then they can make their own planning. But when people are not clear, when there is uncertainty, everybody simply stays put. And the people staying put, it's not just the foreign investors. I think sometimes we overemphasize foreign investors. I think it's both the Nigerian investor and the foreign investor. A huge chunk of the market right now, the control and everything that's going on, is just, if we can mobilize just what we have within Nigeria alone, it's going to make a significant impact. And if we can mobilize the internals, then the foreign investors can now say, aha, if the locals are betting on it, then they'll bet. So this whole deal about trying to just say foreign, foreign, foreign all the time, if they don't see the confidence in the local sector yet, I'm not so sure how we're going to convince them to come back in.
Oh, it's really a complex situation. I know we can go on and on and on, but I must thank you for your time. I'm the CEO, InfoWare Limited, Uwa Agbonile. Thank you so much for giving insight into these issues. Even moving out of the capital market and the economy in general, it is really very important that we address some of these challenges that face our economy at this time, and when we even face recession. Thank you so much for your time.
Thank you for having me.
Yeah.
Thank you.